Another thing that the media loves to just twist around and be like, oh yeah, Fed's raising rates, which means your mortgage rates are going up. No, it actually should be the opposite if the Fed does it correctly, which we have seen. Welcome back to another episode of Mixology and Mortgages. I am the Hatchman, and today I'm excited because I want to talk about three things that the media is absolutely getting wrong. They love to instill fear and just try to scare people. I mean, you got to think about what their main job is, right? Their job is to get viewers, to get people to watch, to get people to share. Unfortunately, what gets shared the most is things that are negative. So of course, they're going to make things sound worse than they really are. Take it from me. I'm someone who works and lives in the market. I know how things work. I see it. I work it every single day and I study it religiously. I want to get into some real numbers here. I want to share with you the way the media is explaining these numbers where they sound negative and then what the bottom line and real story actually is. So let's get into it. The first one is housing, right? There has been a major shift in housing. If you're on the house hunt right now and you were looking last year, didn't buy, and then this year, it's completely different. Last year was crazy hot. We had people, even, first part of this year, honestly, we had people making ridiculously over asking, people paying thousands, hundreds of thousands of dollars, tens of thousands of dollars over asking price. And now we're not really seeing that as much. So this is a better time for buyers. It's a really exciting time for buyers that honestly got priced out and maybe got a little frustrated with the crazy market and investors and cash buyers. If you need financing now, it's not as big of a deal as it was before. People are accepting contingencies, meaning if you own a home now and you need to sell it and purchase another one, if you wanted to do that last year, you were pretty much screwed. There was very few people that were willing to even consider something like that. Now we have more homes on market, with more inventory available, so more homes to choose from. So sellers don't get to be as picky. Now, here's where it gets confusing. People see this and they're like, oh my God, this is the start of it. Now all of a sudden it's gonna crash and home prices are gonna decrease. The biggest stat is, the news was portraying that contract cancellations, this is a perfect one. So they're saying 14% of homes in the month of June were completely canceled, meaning either buyer went under contract, decided to cancel, or the seller listed their home and decided to cancel. 14%, that's scary. This means that, we're headed towards a crash. Oh, let's look at June of 2021, just a year ago in one of the hottest markets that we have. In that month, for 2021, guess what percentage of contract cancellations there were? 11%. We're talking about a 3% difference, guys. There's always contract cancellations for a variety of different reasons. I have seen clients where they go under contract, they like the house, then they get a home inspection and they find out the home is in pretty rough shape. It's riddled with termites or it's got foundation issues. So they don't want to buy it. So they cancel that, they move on to the next one. That's pretty standard. There's always going to be homes like that. There's always going to be things that cause contract cancellations. So don't let the media scare you. These are normal conditions and it's fine. Because of more homes that are coming on market, it makes sense for there to be a slightly higher percentage for that number. So again, this is not alarming at all and in no way means that we are going to see a reversal of home prices. This is the other way to look at it, right? So last year, home prices, home values were increasing at an astronomical rate. Think about, the Autobahn. You're driving on the Autobahn, there is unlimited speed, you can go as fast as you want. That was how home values were going up. They're going that fast. Well, now we're slowing down. Now we're on like a freeway speed. Does this mean that home prices are going to crash and straight up reverse? Absolutely not. There's no data that supports that type of information. Values went up so high and we have more homes coming on market, but there's still demand, a lot of demand. Trust me, I see it every single day. As long as that demand stays and there are not enough homes to meet that demand, we can expect home prices and home values to increase. So for prospective home buyers, if you're concerned about purchasing a home in this market, don't be concerned. You're not going to get 20 to 30% returns on your investment within the next year, but 6, 7, 8%, it's going to be within the single digits. That's still a return. That's still value that's going to be added to that home. And again, interest rates are higher than what they have been now, but they're not always going to stay like this. They're going to come back down. When you buy a house, it's in most cases, it's a 30-year fixed mortgage. Who's to say a year from now rates aren't cheaper, or 2 years from now? You can always refinance that bad boy, get a lower monthly payment. So don't listen to all the fear and the stats that the media loves to just twist those numbers around. Here's another one. So 52% of home prices are coming down. They're saying 52% of homes are lowering their list price. Well, again, let's look at last year. 53%. It's a 1% difference. There's always people, there's always sellers that are going to list really high and see what they can get just to see if they can get it. I don't know that that's a good strategy, but it happens, and it happens a lot. So what happens when a home is overvalued or they're asking too much for it? It's going to come down in price. That's normal. So again, don't let those numbers or percentages scare you. You have to look comparatively, and then it makes sense. So what's the bottom line? The bottom line is housing is still very strong, and we can continue to see it that way. What is exciting is more options are opening up for buyers. There is more inventory. There's more homes coming to market. If you're a home buyer that got priced out in the last year or two, I am seeing things like sellers paying for closing costs specifically to buy your rate down to get you a lower monthly payment using programs like a 2-1 buy down or a 3-2-1 buy down, which I've talked about in other videos. There's tremendous opportunity. So do not let this opportunity pass you by. If you are worried about purchasing a home in this market, don't be. I have this conversation with a half a dozen people every single year that are like, Braden, I should have listened to you, a couple of years ago when I thought it was too high. Now I can't afford anything. So don't be that person, and don't let the media dictate how you're going to live your life. The next thing that the media, same thing, still is kind of getting wrong and not understanding. Inflation when it comes to the Fed raising rates. Those two are very correlated. So right now, if you haven't been feeling it, I know I have, it's more expensive to do anything. It's more expensive to go out to eat, to get drinks, put gas in your car. Everything is expensive right now, and that is because inflation. There's too much money in the market, so it becomes devalued, which means they have to raise the prices for things. And this is happening across the board. You're feeling it as a consumer. Well, production is seeing it as well. It's costing more money to get things. I saw a post the other day that was like, the restaurant, the cost of meat has gone up this much. So what do they have two choices. They can, suck it up and realize that stuff is more expensive, or they pass that price along to the consumer, to me and you, and it's more expensive. And honestly, that's what's happening. The only way to get a handle on this, stop the spending. They want to slow that down. So the Fed's response to this is going to raise the Fed rate. Again, the Fed rate is not mortgage rates. Let me say that again. The Fed rate is not the mortgage rate. The Fed raising rates, that's the rate in which banks borrow money from the Fed. And so if they raise that, then they're going to pass that price along to the consumer. They're going to raise interest rates in credit cards, going to raise interest rates across the board. So what does that do? It's probably going to curb a little bit of that spending for the consumer. If your interest rate's higher and things are more expensive and everything's more expensive, you're going to stop spending just in general. So that's the main idea. So as they do that, as they curb inflation and raise the Fed interest rate, that is going to help mortgage rates. Mortgage rates like that because they are a fixed rate product. Inflation is scary for mortgage products because your money is worth less, and this is a fixed rate. So if you buy it at 5%, it's worth less down the road. That is one of the biggest reasons why we're seeing interest rates kind of hike up, because of these fears of inflation. And until they get that under control, we're probably going to continue to see interest rates rise or, remain where they're at. They're not going to get lower until we can lower inflation. So just keep that in mind. High inflation means high mortgage rates, but high Fed rate does not always equal high mortgage rates. Another thing that the media loves to just twist around and be like, oh yeah, Fed's raising rates, which means your mortgage rates are going up. No, it actually should be the opposite if the Fed does it correctly, which we have seen. They've been getting a little bit more aggressive in how much they're raising rates. This happens around the world. Other countries are raising their Fed rate. We had some that were in the negative, they're back up to zero. That had a positive effect on the bond market, which goes into mortgage rates, causing mortgage rates to get a little bit better. Not a ton, but we'll take anything we can get right now, right guys? Those are it. Those are the three things the media is getting wrong. It is the information on the housing market, the way inflation works, and the way that mortgage rates work when it comes to inflation. So don't listen to them. They need to wake up. So now we're gonna make a cocktail that's gonna wake you up. This one is called the Oaxacan Cafe, or the Oaxacan Coffee. The coffee-based drink, it's gonna have some mezcal, some amaro, some cold brew coffee, chocolate bitters, and some simple syrup. So let's get into it. This is a shaken cocktail. We're gonna shake it up. Dos hombres, mezcal joven, a young mezcal, which means it hasn't been aged, which is why it's clear. Mezcal, if you've never had, it's like a smoky tequila. I really like it personally. I'm a huge fan of it, but there are some that are just not. So anyway, it's a great opportunity to try it because coffee is a very strong flavor and it's gonna take over a good chunk of it. We're gonna get 1.5 ounces of mezcal here. Pour that into the shaker. Then we are going to take this Amaro, which is an Italian liqueur. Kind of its own thing. I don't really know how to explain this flavor. You see, it's a little sweet, it's a little bitter. It's a liqueur. So anyway, we're We're gonna use 3/4 ounces of this, which is gonna go right into that shaker with the mezcal. We are going to get just straight up cold brew coffee. If you don't have, refrigerated cold brew stuff, you can, make some coffee, pour some ice on it, same thing. I'm a huge fan of this. It's called Stoke. I buy it in the store. I really like this stuff. It's not sweetened at all. So this one has 0 sugar in it. It's just straight black coffee. It is delicious. So we're gonna use a full ounce of this right in there. And then this is called Demerara simple syrup. Normal simple syrup is a 1-to-1 ratio of sugar and water. This is a 2-to-1 ratio of sugar in the raw. It's a little bit more of that's why it's darker. So the raw sugar, we have 2 parts that to 1 part water, so it makes it just a little bit thicker. 1/4 ounce of this, because again, I don't have any sweetness in it, so this is gonna give us our sweetness. And then we have these Mexican chocolate bitters. These are really fun. There's some other ones that you can use as well. They're called the mole, like chocolate mole. But Mexican chocolate, similar idea. It's pretty good. So we're gonna use 3 dashes of this. Dark cocktail. It's coffee, so it's gonna be good though. I get this fun little, these are like margarita glasses. I'm pretty sure I bought these in Mexico. But I'm gonna get a big ice cube to put in here. We're gonna shake it up and then pour it over. I'm a huge fan of these, just crystal clear ice blocks. They melt really, really slow and they just look cool. I mean, look at that. So if you've never made your own ice blocks, they're super easy. It's directional freezing, so you almost need like a little mini cooler and then an ice mold. And then the way ice freezes is it's cloudy on the bottom and then clear on top. And so that's how you get these super clear ice cubes. Shake this up. All right, nice good shake in there, get it ice cold. And then we are going to strain this into the rocks glass. Oh, that is beautiful. Yes, look at that. And there we have it, the Oaxacan Cafe or the Oaxacan Coffee. Cheers, guys. I hope you enjoyed this episode of Mixology and Mortgages. If you do have any other questions or any other topics you'd love me to cover or any cocktails you want me to make, hit me up in the comments. And you guys enjoy the rest of your day.